and gentlemen, just like that, stocks are back, okay? We're going to go over all of your news today that you need to know as a market participant. Yes, a bunch of Fed comments, a bunch of comments from Trump. We had shocking economic data today that honestly, I don't know if it's actually positive, okay? It is raising the odds of rate cuts, but it's like so bad that it's like, oh, is that really good? Kind of reminds me of 2022, where if you were an investor during 2022, every time we would get good economic data, stocks would fall. Every time we would get bad economic data, stocks would rise. It was ass backwards. And at the time I was saying, hey guys, we want to be careful what we wish for because at some point it's going to get so bad that it's not good anymore. Okay. Now, we're going to go over here in this video the economic data that we have coming out tomorrow that's going to be a big catalyst for stocks. But really, Friday's the big day. I have my reasons to expect that maybe we get a good jobs report on Friday because after all, Trump fired the head of the BLS. The last thing he wants is a bad jobs report. That's just going to look stupid on his part, like he fired somebody for no reason. We'll talk about that a little bit more throughout today's episode. Ladies and gentlemen, we have a lot of work to get into. Stocks are recovering a bit. NASDAQ up 0.6%, S&P up 1/3%. Russell, the underperformer, down 0.2%, but the Dow is down even worse, down about 0.5% today. Definitely more of a risk on day to say the very least. Ladies and gentlemen, hit the like button and subscribe to the channel if you have not done so already. A big day today in the trading community, up 7% in the trading community portfolio, up 90% year to date, ladies and gentlemen. I think that is going to get a lot crazier into the end of this year. I've been very vocal on this. On this channel for a long time. I think October, November, December are going to be some of the best 3 months we have ever seen in the markets. Like the rally that we see towards the end of this year is going to be absolutely insane as we start to get rate cuts, as we get clarity on the tariff situation, as we get inflation that starts to come down, and hopefully the economy stabilizing and improving incrementally. It's going to be incredible. Now, also 2026, take all of what I just said and add it to the fact of continuing progress on getting inflation lower, continuing rate cuts, AI that continues to progress and become more of a focal point with investors. Like AI is not going away anytime soon. 2026 is the year of AI. I think 2026 is shaping up to be a good year as well. But as I've talked about before on this channel, September, it's a toss-up. It could be a really bad month. It may be a volatile month. You know, we may not do much in September, but the algorithms are already like pre-programmed to sell stocks on any bad news or uncertainty in September. So you almost want to be stoic or just not even look at your portfolio in September because things will get better in October, November, December, in my view. Now, again, this is the trading community portfolio. If you guys want to join that group, check the link out down below in the description of this video. We are identifying massive opportunities in the small cap AI field. Okay, here's the fact of the matter. You want to be early to companies, right? You want to be early to the big winners. You don't want to be late. By the time everyone loves a stock, you're late. Okay, we're getting in early. And there's one stock in particular I have over $100,000 invested in. Yeah, up a little bit, but it's just the start for that company. And yeah, they report earnings on October 1st. And they already basically said they were going to blow out expectations. It's crazy that nobody knows this company. Link down below in the description of this video. Not a financial advisor, not a financial planner. Again, come to your own conclusions. But if you want to join that, check it out. Link down below in the description of this video. Read the disclaimers. And obviously, don't be a jackass, okay? Don't be a jackass. Like, what one person does not mean you should do it. Just future returns are never a guarantee. Like just don't be a jackass if you join that group, okay? But let's get into today's episode. Now, in the broader markets today, the VIX is down 1.22%, so a little bit less fear, less hedging. The Russell 2000 is down 0.25%, NASDAQ down 0.87%, S&P is down 0.25%, the Dow is down around 0.5%. So a little bit more of a risk on day. Let's start, before we get into all of your other news, with the economic data today, because that was shocking. Okay. Jolt's job openings, get this, came in at 7.181 million. Okay. So what does this mean? Okay. This means, well, I should say we were expected to be at about 7.4 million. So this means you've either hired a bunch of people and those job openings no longer exist, or the economy is slowing down and those positions were not filled. They're just not needing to be filled anymore. Does that make sense? Like if you're a, mom and pop shop and you're looking to hire 5 employees, okay? Well, if business is good and you hire 5 employees, well, now you're not going to have any job openings. So this number would go down, no job openings available. Okay, you filled all the positions. Or if you're a mom and pop shop and you're looking to hire 5 employees, but maybe you hire 2 employees and you say, okay, we're good with that. Then you lose 3 job openings because maybe the economy is not as good, okay? This was a shockingly low number today. And honestly, I'm a little surprised Wall Street reacted positively to this, because it could be a red flag for a bad jobs report later this week. Now, factory orders month over month came in at negative 1.3%. And the expectation was negative 1.4%. You also got the Fed beige book as well today. A couple Fed speakers. We'll talk about that more in just a moment. Now, Thursday or tomorrow, you do get the Challenger job cuts, the ADP employment change, exports, imports, balance of trade, initial jobless claims, non-farm productivity, final numbers, unit labor cost. Okay, some smaller data. But one of the biggest things tomorrow is likely going to be ISM Services PMI for August. Okay, you're expecting the number to go from about 50.1 to 51. So you're expecting things to rise there. Business activity expected to rise. Employment expected to fall a little bit. New orders expected to fall a little bit. And prices are only expected to rise a little bit. So if prices come down, that's going to be really good with tomorrow's ISM Services PMI. And then obviously on Friday, this is all leading up to the big data set. That is non-farm payrolls, and that is the unemployment rate. Non-farm payrolls expected at 75,000. Unemployment rate expected at 4.3%. Honestly, the best case scenario is probably coming in line with expectations. Like, not enough to cause a large growth scare. Like, not enough for people to get fearful about a recession, but not enough for people to say, that was so strong, we don't need rate cuts at all. Right? Probably coming in line around 75,000 jobs is the best case scenario. You can make a bullish or negative, case for a high number or a low number, right? So that's going to be big. The unemployment rate is also going to be very important, arguably more important than the headline jobs number, at least from a rate cut perspective. Now, you could see today, the odds of rate cuts actually went up because the JOLTS job numbers came in really low. So, I don't know if JOLTS job openings coming in that low is actually a good thing, but the markets responded or reacted today like it was a good thing. So, yeah, we need more details, right? Like, what's the jobs report going to look like? Because that's a red flag. But the probability for a cut in September went from 86.6% to 94.6%. So the odds jumped like 8% today. Okay, based on that. October 29th, you're pricing in another cut as well. You're pricing in 2 cuts by October 29th. 52.4% chance of that. And for December 10th, you're pricing in a 3rd cut, okay? Or getting pretty close to pricing in a 3rd cut. 2 cuts priced at 46.8%, and 3 cuts the odds are 40.8%. So if we get a bad jobs report, you're going to start pricing in more cuts, but that's not going to be a good thing, right, for the markets. Ultimately, you want the Fed to be cutting rates for the right reason, not like the economy is slowing down or going into a recession or anything like that. So, yeah, I just be a little careful in September. Like, the moves we see in markets, they're not always going to make a lot of sense. Even today, like, I would argue this probably wasn't a good data set. Like, job openings, you want to see those coming high, right? That's a good sign for the economy. So it's going to get a little weird. UBS today says don't fear September or record highs. They say the S&P 500 dipped 0.7% to start September, historically the weakest month for stocks. UBS noted the index has fallen in 6 of the past 10 Septembers, averaging a 2% decline. Still, the bank advises investors not to fear seasonal weakness or record highs. UBS expects the S&P 500 to reach 6,800 by mid-2026, supported by 1. Strong earnings momentum. 81% of companies beat Q2 estimates. Anticipated Fed rate cuts of 100 basis points over the next 4 meetings. 3. Long-term AI-driven growth, with global AI capex projected at $500 billion by 2026. They say since 1960, the S&P has delivered 12% returns on average in a year after an all-time high and 38% over 3 years. Again, I honestly think we are shaping up to have probably the best 3 months we've had in markets in a long time. October, November, December of this year, I think are going to be exceptionally strong. I think the S&P could hit 700 by the end of this year. It's going to be a damn good time to be an investor, in my view. Again, not a financial advisor, in my opinion. Next year is going to be very strong as well. Something you don't want to miss out on. In my view, again, could be wrong. I make some pretty strong statements sometimes. But yeah, 2026, that's going to be the year. Economy should be getting better. Trade deals are hopefully done. Geopolitical tensions can die down. Consumer hopefully is recovering. Inflation is going away. And we can focus on AI, innovation, growth with a bunch of rate cuts. 2026 is really shaping up to be a big year for stocks. Trump says, I'll know what to do with Russia after the Putin talk. That is partially because Donald Trump last night wrote on X, the big question to be answered is whether or not President Xi of China will mention the massive amount of support and blood that the United States of America gave to China in order to help it to secure its freedom from a very unfriendly foreign invader. Many Americans died in China's quest for victory and glory. I hope they are rightfully honored and remembered for their bravery and sacrifice. May President Xi and the wonderful people of China have a great and lasting day of celebration. Please give my warmest regards to Vladimir Putin and Kim Jong-un as they conspire against the United States of America. So, he sent a shot here with this one last night. And Trump on Putin says, I am having a conversation with him within the next few days. Trump on the tariff case says, if we lose the court case, I guess we'd have to unwind trade deals. Trump says our country could be unbelievably poor again if we lose the tariff case. Trump says the U.S. could be rich or poor depending on the Supreme Court case on tariffs. Trump says that tariffs are vital to the success of the U.S. Trump says it's possible that someday tariffs replace income tax. Trump says he is thinking about removing troops from other countries. Says, I'm thinking about removing troops from other countries, but I never even thought about removing troops from Poland. Trump says he may send the National Guard to Louisiana for crime. Trump says that he expects tremendous midterm results. Fitch Ratings projects U.S. government deficits will rise to 7.8% of GDP by 2026. Okay, this is the deal here, guys. Let's be clear. Okay, so tariffs and the court situation, it's pretty straightforward, actually. Okay, if we don't have as many tariffs as we were expecting, then it's a problem for the deficit, right? The deficits are going to be larger. There's going to be more borrowing from the government. We've seen rates globally really rise yesterday on that. But if we don't have as many tariffs, You have less inflation, stronger economy, better earnings, more rate cuts. There is some big positives to that as well. In the very near term, between now and October 14th, presumably when we hear something from the Supreme Court on this matter, there's going to be uncertainty. And I think that's what the markets really reacted to yesterday and sold off on. Not that, not having tariffs is actually negative, right? Like the tariffs being canceled, I don't think that is net negative. But it's the uncertainty that's caused. And Wall Street in September has no room for uncertainty. They're just going to sell stocks. Trump says that Venezuela has been a very bad actor. That is obviously after the United States military used like a drone and exploded the boat that was carrying drugs from Venezuela, also killed 11 people. Implies second and third phases of Russian oil sanctions. Trump says that President Xi should have mentioned the U.S. in his speech. Trump says we will find out how U.S.-China relations are. Trump says we will find out over the next week or two how good the relationship is with Russia. Trump says I was watching China's military parade. AMD executive says we have more than 40 active engagements with different nations for sovereign AI. This was at the Citi Global TMT conference. Canada's Prime Minister Carney says I last spoke to Trump on Monday. Putin said we are not preparing Trump's visit to Moscow, but he's invited. And Putin said that nobody said anything negative on the US admin in Beijing. Putin on Trump's conspiracy comment says Trump has a sense of humor. So maybe we just take Trump a little too serious. Maybe he actually jokes sometimes. I don't know. I think that's how Putin took it. Putin says that Trump is trying to find a peaceful solution to the conflict in Ukraine. Putin on U.S. envoy Witkoff says he correctly relays our position to the U.S. president. Putin says that trade disbalances must be settled through negotiations. The U.S. has now more unemployed people than job openings for the first time since April of 2021. Bostic says, I am not ruling out a September rate cut depending on the coming jobs report and other data. Fed Bostic says businesses still expect a solid year and other evidence indicates Fed policy is not overly restrictive. Bostic says it remains unclear how consumer spending will evolve. Bostic says with hiring and labor supply both slowing, the U.S. remains near full employment. Bostic says businesses do not expect a big shift in the labor market, but if that happens, I will be diligent in the policy response. Bostic says, I still think tariff effects on consumer prices won't fade fast, may take months to materialize. Fed Bostic says that firms can't absorb higher tariffs much longer. Musa Liam today says there is a risk that the labor market will slow more than expected. And Fed Musa Liam says tariff revenue is helping the government's financial position. Again, it's one of those situations where like not having tariffs, it's going to make the financial position of the government look worse, but it's not something that is like immediately a major concern. Like 10 years from now, it's going to be a bigger problem. And Fed Musa Liam says AI will ultimately be a positive thing for the economy. And Fed Musa Liam says baseline is that tariff inflation impacts will fade, but there's a risk of persistence. Ed Waller says tariffs are a tax that will lead to slower growth this year. Again, if we don't have tariffs, that's better growth, less inflation, stronger earnings from corporate America. Sure, you have the offset that leads to a worsening financial situation for the government. But I think those three things, lower inflation, higher growth, better corporate earnings, are a net positive versus the government being in a slightly worse financial position. Waller says, I don't see recession, but slower growth. And Waller says, we know we'll have a blip of inflation, but it won't be permanent. 6 months out, we will be closer to 2%. Again, that's my expectation, right? I think into 2026, it's going to become clear inflation is really on its way to 2%. And that's what gives us a very strong or partially gives us a very strong rally next year. Ed Waller says, I see multiple cuts over the next few months. So again, guys, you just have to remember that September, there's going to be a lot of weird shit that happens in September. But you want to be stoic to this. You don't want to be super emotional. You want to be ready to capitalize on what I think will be the best 3 months in the markets that we have had in a very long time. That is October, November, and December. And I mean, from my perspective now, it looks obvious trade deals are going to get done, or we're not going to have tariffs problems in general, which, I mean, that's also positive. I think we're going to have less inflation. We're going to have a bunch of Fed cuts heading into 2026, a stronger economy, better clarity around earnings, and a focus on AI growth. Like 2026 is shaping up to be a huge year for markets. And you do not want to miss that opportunity because, hey, September could be bad. Who cares? But if you could just make it through that, I think that there is a massive light at the end of the tunnel coming here soon. Now, ladies and gentlemen, if you guys want to come trade with us live in real time, check that out. Link down below in the description of this video. The trading community portfolio is up 92% year to date. We are outperforming 98% of 99% of hedge funds and institutions this year. What we are doing is going out and finding those small cap AI stocks before Wall Street does. Okay, we're going out and we're early to these AI stocks, right? There's many testimonials to this. Nebius, Novartis, IONQ. Hell, I bought Palantir on IPO day at $10 per share back in the day. Okay, that's the idea. We're going out and buying these high quality AI stocks first. And yeah, small cap, right? They're small cap names. You're playing in the small cap arena. So it is very risky. It's not financial advice. Contact financial advisor. You're not, you are responsible for your own investment decisions. But if you guys want to come get involved with the community, check that link out down below in the description of today's episode. Ladies and gentlemen, hit the like button and subscribe to the channel if you have not done so already, because it's free 99. It costs you absolutely nothing to do so. Yeah, that is going to do it. You guys have a great rest of your day, and I will see you in the next one.